This may possibly be my most asked question, and that is, how much can I get approved for? How much mortgage can I afford? Hey honeybees! Welcome back to my channel, or if you're new, my name is CIARA. I do videos on finance and lifestyle, and I am your one-stop shop for mortgages. I work full-time as a mortgage loan officer, and I've helped hundreds of people to buy homes and to build wealth. The amount of money you have saved can be the difference between you getting approved or not getting approved. This video today is in partnership with Winn-Dixie. I'm going to tell you ways that you can actually save with their app. This is going to help you save on groceries and really just help you to get the most out of your grocery shopping experience. So I already have the Winn-Dixie app and I go to Winn-Dixie. I have one around the corner from where I live, so I know a lot about how this app can help you save. You can actually track your balance and you can redeem rewards points on groceries. Through the app, you can also shop the weekly ad and you can clip digital coupons. So if you're like me and you don't have the time or energy to be clipping coupons, this app does it all for you in one, right there in the app. You can even earn bonus points when you purchase a deal of the week, and you can use what they call mystery bonus multipliers at checkout. Each time you shop at Winn-Dixie, you're earning points that you can later redeem for dollars off your total. And if you're just getting started or you want a pro tip on how to save even more money, you'll want to save your higher points multipliers. So think like your 10 times, 20 times, 40 times multipliers. Save them for larger shopping trips so that you're getting even more points on a larger scale. Then you can use these points to redeem at checkout for dollars off your total on your next shopping. I also love that I'm able to shop the weekly ad, and it just helps me to be organized and to plan out my grocery shopping list that much better, which makes my whole shopping experience quick, easy, and it saves me money. And one way that I am able to save money is to take the money that I saved and I like to invest it, and that helps me make more money, or I'm able to just throw that at something that I am saving for. I am actually saving for my own house. I really want to build and I really want something nice. Like I want it to be something really dope and something I really want. And so to me, it's worth it to save up to get something I really want. So that's something you guys can do as well, especially using the Winn-Dixie app to help you save money on your groceries and to enhance your shopping experience. Definitely check it out. You can download it by clicking the link in the description bar. That will allow you to download the app and experience all the wonderful savings and benefits that I do from the app. All right, let's get into it. Okay, so when you go to buy a house, the amount that you get approved for is going to be determined by 3 factors, and that is your DTI, which is your debt to income ratio, your credit score, and how much money you have saved in the bank. So let me break those down a little bit more. Your DTI, like I said, is your debt to income ratio. I've talked about DTI before on this channel, but I'll break it down very briefly for you again. Your DTI is your debt to income ratio. So it's exactly what it says. It's the amount of debt you have versus the amount of money that you bring in. Now, I get this question a lot and people ask me, what debts count, what debts don't. I've said before that a debt that is on your credit are the only debts that count. Let me say that again. Debt that is on your credit, meaning on your credit report, those are the only debts that count. If your cell phone bill is not on there, if your light bill is not on there, if your rent is not on there, it does not count in your debt to income ratio. Only debts that show up on your credit count in the debt to income ratio. So in order to calculate your debt to income ratio, calculate how much money you bring in monthly in income, and you want to count how much monthly you spend on debts that show up on your credit report. So this is going to be your debt to income ratio. You're gonna divide your income by your debts. You will get a percentage, and that percentage is indicative of your DTI. In order to get approved for the most money possible, you want your DTI to be low. For example, for an FHA loan, having a DTI of 43% is a good target range for approval. If you have tons of debts and you only make a little bit of income, your DTI is going to be through the roof. You may see a DTI of 60, 70, 80, 90, 100. I've seen DTIs that high before. That is a non-approval zone. Really anything that is over 50% DTI, you're kind of teetering on thin ice with your approval. So the DTI will help you gauge if you can afford more of a house or if you can't afford any of a house right now. So that is your first thing. That's the first thing that I look at in terms of approval amount. The next thing is credit score. Your credit score can determine what DTI you have to get approved, or your credit score essentially determines the max DTI you can have. I know that may be confusing, but hear me out. Say that you have a DTI of 50%. You are more likely to get approved for a higher amount if you have a higher credit score. The higher your credit score, the larger your DTI can be, and you can still get approved. The larger your DTI, the more house you're buying. And the third factor that plays into that is how much money you have saved. If you have money saved, in addition to what you have to put down and what closing costs you have to cover, that is called reserves. That is money that you have set aside or reserved for a rainy day, if that helps you remember what reserves are. Reserves are looked at as a positive force in your application. The more money you have in reserves, the more likely you are to get approved. And the more money you have in reserves, the more likely you are to get approved at a higher DTI, which means a higher approval. Essentially put, having more money saved, having a high credit score, and having low debts are the perfect combination that will allow you to get approved for the most possible. So I'm gonna give you some specific tips on how you can maximize your chances of approval for the maximum amount. In general, you want to keep your DTI low, meaning you want to keep your debts that are on credit as low as possible. If you can pay some things off or reduce some things so that you have small minimums, then that is going to put you in the best position to get approved for the most money possible. The more you can reduce those monthly debts or the amount of money that is coming out of your income every month, the more you can get approved for. For example, car payments. A lot of people ask me about car payments. Car payments can be really detrimental to your DTI because they take up a large chunk of your monthly income. A lot of people I see have $500, $600, $700 a month car notes, and unless you're making a really high income to balance that out, you are murdering your chances of approval, or you're greatly lowering the amount that you can get approved for. So one way to alleviate that is to either have a co-borrower that has paid your car note for the past year and it's documented, and that way we can remove it from the DTI. Or if you have 10 payments or less left on the car and that payment's not more than 5% of your monthly income, we can take that out of the DTI as well. So Otherwise, keeping your monthly payments low in terms of your credit cards, just keeping the balances low enough to where all you have to pay is minimum amounts every month. That's going to be really helpful in helping you to get approved for more. Those Amex cards where you have to pay them off every month, it's going to be difficult when you go to buy a house to get approved for more money because they're going to show larger amounts that have to be paid every month. There is a way around that. You can pay it off at closing, or once you've paid it off before closing, you submit a statement to show it's paid off, and we can take that out of the DTI as well. So there's little tips and tricks that as a loan officer I'm aware of that I can do to help you to lower your monthly debts and to maximize your approval amount. But if you can do your part by keeping your debts, your monthly debts, as low as possible, that is going to help you get approved for the most possible. Your credit score, I mean, that's pretty self-explanatory. You want to keep your credit score high. If you want to get approved for the most possible, maintain a credit score of at least a 680. Anything above that is going to help you get approved for even more, or help you get approved for a more economical loan type. It'll help you get a lower rate, which I'll get into. So keeping your credit score as high as possible, that also helps you to get the maximum approval amount. And then of course your savings. So you want to just save as much money as possible. And I like to say, save more than you think you will need, because you're always going to need more than you think you'll need. And if you have money in excess of what you actually need, that's going to help your approval chances, as well as help the chances of you getting a higher approval amount. So save as much as possible. Like I said, I do have a video on savings hacks and ways you can save money. When I kind of started out as an adult in the real world, I paid cash for just about everything. I saved every penny possible. I stayed at home for a while, so I didn't have to pay rent. And when I finally moved out, I was able to pay cash for my furniture. I was able to have money saved in the bank. I was able to go on trips, and all of that because I saved. So this applies to life in general, not just buying a house, but saving is so important. And it's definitely an arsenal you have in buying a home and getting approved. So there are other things that can help you get approved for more and affect any of those aspects I just talked about, specifically your DTI. There are ways to keep your DTI low so that you can get approved for more. One of those ways is to keep your escrows low. And when I say escrows, I mean your hazard insurance and your taxes and any other fees associated with your monthly mortgage that are not just your principal and interest. So to break that down to you, your monthly mortgage payment is composed of a number of things. It's going to be your principal and interest, which is going to be dependent on your rate, which I'll get to. So your principal and interest, your homeowner's insurance is included in that. Your property taxes is included in that. Your mortgage insurance is included in that if you have to pay it, as well as any other fees, like if you have an HOA fee, that's included. If you have or you're required to get flood insurance, that's included. All of that is included into your monthly mortgage payment, which does affect your DTI when it comes to approval. So the lower you can keep those escrows, your homeowner's insurance, and any other fees that you can shop around or you can choose as the buyer, like flood insurance, then that's going to help you get approved for more. So be mindful when you are buying, when you're searching, when you're shopping around. You want to keep your escrows very low as possible. I have clients who have decided to go with the most expensive insurance because it's who they have their auto loan with, or it's their cousin or something like that, and it screws them over in the end because it messes up their numbers, or they end up having to bring a ton more to closing because it explodes their closing costs. So keeping those numbers really low is going to help you get approved for more, and it's just going to make the home process in general a lot more pleasant, and you not having to come off of as much money at closing. Another thing, or the last thing I'm going to tell you guys about, is closing costs. Closing costs can greatly affect your ability to buy, because the higher your closing costs are, the less money in reserves you have. And the less money in reserves you have, the less chances of you getting approved, or getting approved for the most possible. Really what you need to know is, when it comes to closing costs, is you want to keep your costs low in terms of those things I told you about that fit into your mortgage, such as your homeowner's insurance, your flood insurance, and anything that you have control over within your mortgage. And that is because those fees get factored into closing costs because they get escrowed, or they go into a pile of money. They get saved. You save a bunch of money up front to cover these costs in the long run. I don't know if I'm explaining that good. Basically, the higher your escrows, meaning your homeowner's insurance, your property tax, your mortgage insurance, your flood insurance, your HOA, the higher those are, the more your closing costs will be. So if you can keep those low, or as low as possible, the lower your closing costs are going to be, the more reserves you have, and the more likely you are to get approved, or to get approved for more money. It really all works together, and that is why it is so important to have a good loan officer, somebody who really can maneuver all of the different moving parts of a home loan approval. And this is why when you guys leave me questions asking, hey, how much can I get approved for? I always tell you it's a lot more detailed than you throwing out a few numbers and me giving you an amount you're approved for, or saying if you're approved. It goes even deeper than what I'm telling you guys now. But if you're watching this and you're sitting here and you're like, golly, that's kind of a lot to think about, then just imagine what all goes into the full approval. That is essentially what goes into the decision of how much you get approved for. So just to sum it all up, to get approved for the maximum amount possible, and to kind of know if you are able to afford a mortgage and how much you can afford, you want to keep your debts low, keep your credit high, keep your savings high, and keep your costs low. All those are going to help you get approved for the most money possible. And the lower your DTI is, the more you can get approved for, essentially. So I hope that helped you guys out. If you guys are interested to know what DTI will help you get approved for what loan type, check out my other mortgage videos. I have an entire mortgage playlist where I map everything out from beginning to end in terms of the different loan types, what credit score you need to get each loan type, what DTI will likely get you approved for each loan type. You'll want to watch those videos. So yeah, that's it for this video. I hope you guys enjoyed it and you learned a lot. I'm sure there will be a plethora of questions, so be sure to leave those below in the comment section. Also, make sure to subscribe so you can join the Honeybee fam, and hit the bell button for notifications so you'll always know when I upload. YouTube does not let you know when I post up a new video, so hit the bell button so that you'll always know and you won't miss out on all the great mortgage information and other videos that I have for you. Also, give me a big thumbs up if this helped you. If you want more, it lets me know what kind of videos to create. It lets me know that it's helping you guys and I should make more. So definitely hit the thumbs up button. Thank you guys so much for watching. I love you to the bank and back, and I will see you in my next video.